China analyst based in Beijing. Einar, this is China's largest move to date in its campaign to tighten supervision of large internet companies. What kind of message does it send to other internet giants there?
Well, Rachel, you have to understand what's at stake here. What they were doing was they were saying to vendors that you sign with us and you can sign with no one else. So that's restraint of trade. There are laws directly on the books, aside from monopolistic law, that says you can't do that. So they broke that law. And one of the bigger issues here is that these large companies that have developed in China have used their size and their ability to raise funds, not only domestically but internationally, to in essence raise enough money so that they can buy other monopolies and assemble huge consortiums that basically take big swaths of the market. China doesn't want to see that. As of last September, they were investigating Google for anti-monopolistic practices. In November, they were changing laws, and then they started going after Alibaba. You can expect Tencent to be next, and some of the other ones will do it. They're also looking at what they call variable interest entities. These are called VIEs, which have been often used to try to kind of skirt around Chinese law because they're offshore. And China, the regulators have signaled that they intend to see through this, and they will be looking at those companies, even if they use these kind of tactics.
$2.7 billion is a lot, but it's still only about 4% of Alibaba's 2019 China revenues. What kind of impact will this likely have on the company?
Well, no, it's not going to impair the company's ability. They earn a lot of money, but it is a very, very strong signal to everybody that the government is taking this seriously and that people are going to have to change their practices. For Alibaba, that means getting out of non-core businesses. Especially, they were offering kind of, wealth management and some other things that really put them very close to banking. Now, they do have separate bank entities, but you can expect them to, the government to be looking at trying to break those up. They don't want large entities controlling the market and in essence, taxing consumers as opposed to competing for their business.
All right, Einar Tangen in Beijing. Einar, thank you.